morning, everybody. This is Henry. It is 8:05 a.m. the 14th of October 2009. In about 25 minutes, we're going to get the U.S. core retail sales number month on month, and it is scheduled to be released at 8:30. The forecast for this number is at 0.3% with a previous release of 1.1%. Now, we are going to get two retail sales release at the same time. One is going to be the core release and the other one is going to be the headline release. Now, the core is also known as X Auto because it does not include the automotive components, which could fluctuate seasonally, and that would basically give you an inaccurate view of the retail sales number. So what we always look for, and most investors look for, is the X Auto or the core retail sales release. Now, the headline number is expected at -2.0, and the previous release was at 2.7%. And that's basically because of the Cash for Clunkers program that was in effect last month. So this month, obviously, we're looking at a negative release for the headline. However, the core release is actually expected to be at 0.3, so it's positive. We're going to be looking for several things. Number one, we're going to be looking for a nice round deviation of positive 1% on the core number. Number two, we're going to be making sure that the headline number and the core retail sales number are both in the same direction. Meaning, if we have a positive, a better than expected core, we like to have a better than expected headline. Now, mind you, the headline is -2.0, so anything less negative, like -1.8, -1.7, goes with a more positive core number would do. But if we have a conflict, doesn't matter if we have a positive core, negative headline, or a positive headline but negative core, it will be considered as a conflict. So in the event that we have a conflict, we're going to be staying out of the market until we have a clear direction. So that's the first thing we need to watch out for. Now, the numbers are going to be coming out at 8:30 sharp, and there's going to be a lot of market reaction to this release because the retail sales number, it makes up about 2/3 of the GDP in the United States, and the US retail sales covers about at least 1/3 of the entire world's retail sales number, because the US is basically a economy based on consumption. So this number will have not only a high impact release for the economy in the US, but also for the world economy as well. And this is one of the signs that economists look for recovery. So yeah, it is a pretty huge and high impact event, and it's a world caliber type of event. So not only will see the US dollar react to it, but basically every major currency will react to it strongly. So on a better than expected number, we should see risk appetite. That's why we're looking at the dollar-yen pair. On a risk appetite trade, we'll be looking to buy. Now, if we get a worse than expected number, missing expectation, then we could be looking at risk aversion. And risk aversion could see a stronger yen, and the dollar would be stronger. However, the yen should get even stronger than a dollar. So we should be looking for a sell order on the dollar yen. So that's basically the scoop for this trade. We do what we always do. We wait at 8:30, wait for the release to come out, make sure that our tradable numbers are being released, positive 1.0 or negative 0.3. And then we check to see if we have a conflict with the headline number. If there's no conflict with the retail sales, the core retail sales and the retail sales are in tandem going the same direction, Then we look to the market for that initial reaction to confirm that the direction is going the same. And if we get all that, then the next step will be to wait for the market to give us a decent retracement. And at the end of that retracement, we'll jump in. Hopefully, we'll wait for the market to give us 20, 30, 40 pips. So that's basically the plan. And we're now coming up about 19 minutes for the release. So stand by. I'll be back and we'll look at this live. Thank you.
Retail sales expected minus 2.1%. Prior was 2.7%. Retail sales less autos for September expected 0.2%. X autos and gasoline expected 0.2% as well. September import price index month over month expected 0.2%, and year over year expected minus 11.4%. And Canadian new motor vehicle sales for August expected 0.0%.
Alright, coming up in less than a minute here, so stand by. We're probably going to get the headline number first and then the core, so it's going to be a little bit of delay there, but it's okay. We're not looking to jump into the market immediately after the release. So
September advanced retail sales, September import price index, the Canadian new motor vehicle sales should be out in just a few seconds.
Alright, stand by. Few seconds to the release.
Sales minus 1.5%, better than minus 2.1% expected. Prior buys lower, however, 2.2% from 2.7%. Less autos at 0.5% is 3 cents higher than expected. Prior buys 1/10 lower to 1.0%. X autos and gas at 0.4%. This is 2 tenths better than expected. Import price at 0.1%.
We have better than expected number, but both of them going the same direction, but not really much of a market reaction here. I guess we didn't hit our tradable deviation. The headline number is negative 1.5 versus the 2% that we're looking for. The core number came out at 0.5 versus the 0.3 that we're looking for. So not much of a difference here, and not much of a market reaction. Seeing some weakness in the Japanese yen pair immediately, but aside from that, not too much of a market reaction. As we can see, the dollar yen went up immediately after the release. Right now we're seeing about 24 pips of movement. The pound yen, give you guys some idea, went up about 43 pips on that spike, but now it has retraced to 33 pips. So not really much of a market reaction, to be honest with you. And because we're not seeing much of a market reaction, it's better that we stay out of the market for now until we can see some direction of where the market is going to go. And remember, it is 8:30 and we're coming up with the reversal to 9:30. I think certainly the equity market will be happy with this release because it did come out better than expected, but I'm not seeing much of a market reaction, and we see a lot of pre-market pricing in, especially in the Japanese yen pair. As we can see, I think it went as low as the 89 figure, and just before the news we saw about 60 to 70 pips of pre-pricing in of the USD JPY pair to this release. So there's going to be some profit taken primarily before we can see a momentum pushing the market one way or the other. So I think the prudent thing to do is to stay out of the market, because we have the market cycle going against us. We don't have the momentum pushing this trade. We don't have our deviations getting hit. On top of that, there's technical. We're looking at the top of the range on the dollar yen, and on the euro, dollar, and the pound dollar, we're also looking at the top of the range. So whenever we have congestion level, market tend to reverse. So technically, it's not on our side. Fundamentally, it's not on our side. Market cycle is not on our side either. And I think it's better that we let the market do its thing and whatever retracement or profit taken or consolidation that it takes, let them take place first, and let's come back at 9:30, about an hour, to look at the market. When equity market opens, I think most of these volatility will settle down, and we might find a good looking pair to jump in and pick up some pips. So that's pretty much, I think, the best course of action, to be careful and not to be jumping into the market based on a half-assed news release. So that's the plan, guys. I'll see you all just a little bit before 9:30, so it's about an hour from now. So take a break, get some coffee, do a little jogging if you want. Just be back here before 9:20 or so, in case I have new information that to share. But most likely, from 9:25 on, we'll be looking at the market until maybe 10 o'clock, 10:15 for an entry. If we do get an entry, then we'll wait until we get out of the trade. If there's no entry, I'll let you guys know early on, hey, the market still look kind of foggy here and there's not much to do. I'll let you guys know around 9:30, so don't waste your time there. But anyways, I think staying out of the market is a good choice right now, and I'll see you guys in about an hour. Okay guys, so I'm going to be taking a small position on the Euro Yen here. Just got in at 99. I still feel we'll see 75, maybe even 70 before it to come back. So I'm just taking a small position, knowing fully well that I could be adding more to it as a scale-in entry. So if you guys want to follow, it's up to you. But if you want to be more sure, I will wait for the 75 to take place, and we could definitely see it. I might not be able to enter my trade exactly around the when we are getting close. And just word of advice, I'll be looking at the market when it's 80, so the alarm will be set at around 80, few pips before the we get there. So the market might not hit exact number 75 before it bounces back. So when it's around 80, it's good enough for me. So just to give you an idea, and obviously I'm looking at the 141.90 for the pound yen to drop. The low of the day is 141.73, so that's good entry as any at the low of the day. So keep that in mind. The dollar yen bounced off from almost at 89, so we're about 22 pips from the drop just now. So that's giving you a sign, maybe the drop here for the Euro Yen and the pound yen could be looking at some kind of support, and that's one of the reasons why I'm jumping at 99. Just a little bit of correlation trade here and there that helps with the trading. Okay, so I will come back and look at this trade, and if you're in, good for you. If you're not in, good for you too. Doesn't matter, because we could see the 75, and that could turn out to be just jumping the gun here. So we don't know until a little bit later to see where we are with the market. Alright guys, I'm gonna go ahead and take my profit here, about 20 pips. Got in 99, got out at 19. It's an okay trade. I mean, it took a little while. Got in roughly around 9:45 or so. Now it's 11:45, so about 2 hours. Not bad. Almost like an hour, 10 pips or something. It's still an okay trade, I guess. Out of the trade now, and end of the day. Reason we got in on this trade, as I explained it, we're looking for that reversal on the market cycle, and then the long term is obviously for the market to continue. So once that market cycle takes place, we're jumping on the bottom and just sit tight and wait for the trade to give us profit. So turned out to be pretty good. Alright, thank you.